All right, let's talk about the Indian stock market. If you've ever felt a little intimidated by it or just didn't know where to even begin, then you are in exactly the right place. Today, we're going to lay out a simple map to get you started. Seriously, think about it. The phone in your hand, the bank where you have your account, maybe even the company that made you breakfast. A lot of these are public companies. And the cool part? You can actually own a piece of them. That's exactly what the stock market is for.
I know. You see all those blinking charts and scrolling numbers on TV, and it looks insanely complicated. But honestly, the basic ideas behind it are way simpler than they seem. Our whole goal here is to just cut through all that noise and give you a really clear, simple starting point.
So, in the next few minutes, we're going to give you the basic map. No confusing jargon, just the absolute essentials you need to feel confident enough to take that first step. And that's it. It's that simple. Think of it just like a massive, organized auction. But instead of art or antiques, people are buying and selling tiny slices of companies. When you buy a share, you're basically saying, hey, I believe this company is going to do well in the future, and you're putting your money on it. Okay, so if it's a giant auction house, where is it? Well, in India, you've got two main arenas where all this action happens. Let's dive in and see what they are. So, you've got the old-timer, the Bombay Stock Exchange, or BSE. This one's a true veteran, the oldest in all of Asia, kicking since 1875. And then you've got the newer kid on the block, the National Stock Exchange, or NSE, which really revolutionized things with electronic trading. But here's the key difference for you. Look at that market share. The NSE is, well, it's the giant in the room.
Yeah, check that out. The NSE handles something like 80% of all the trading. Now, why does that matter to you as a beginner? It all comes down to one word: liquidity. High volume means it's like a super busy marketplace. There are always people looking to buy and sell, which means you can get in and out of a trade easily. It's just smoother. And that's exactly why pretty much everyone recommends starting your journey on the NSE.
Okay, so there are thousands of companies out there. You can't possibly keep an eye on all of them, right? Of course not. That's where a stock index comes in handy. I love this analogy. It's like a thermometer for the market's health. You just take a quick look. If the index is up, it's a good sign things are generally positive. If it's down, well, the overall mood is a bit gloomy. So, the BSE's thermometer is called the Sensex. It keeps tabs on 30 of the biggest, most established companies in the country. We're talking about the blue chips here, the household names, the giants that have been around forever. They're the super stable, reliable players in the game.
But the one you'll hear about most often, the real headliner, is the NSE's Nifty 50. As the name suggests, it tracks 50 companies, not just 30, and it pulls them from 13 different parts of the economy. Because it's so much broader, it gives you a much better picture of how the entire Indian economy is doing. It's the one everyone watches.
Okay, quick recap. We know where the trading happens, the exchanges, and we know how to check the market's temperature, the indexes. So what do you actually need to get in the game? It's pretty simple, actually. There are just 3 things you need in your investing toolkit. First up, obviously, are the shares. And I really want this to sink in. A share isn't just a number. It's a real tiny piece of ownership in a business. It's a powerful idea, right? You're not just gambling on a ticker symbol. You are literally becoming a part owner of a company you believe in. Okay, second thing. You buy these shares, where do they go? Well, back in the day, you'd get these fancy paper certificates. Thankfully, we're past that. Today, everything is digital. Your shares are held securely in something called a Demat account. The easiest way to think about it, it's your digital wallet, or maybe a digital vault, built specifically to hold your investments. And last but definitely not least, you need a broker. Here's the deal. You and I can't just call up the National Stock Exchange and say, hey, I want to buy some shares. It doesn't work that way. The broker is your licensed guide, your connection to the market. They give you the app or the website that lets you actually place your orders.
Now, it's super important to know that not all stocks are created equal. They usually fall into categories based on the company's size. You've got your large caps. These are the big, stable giants we talked about. Lower risk, but maybe slower growth. Then you have small caps. These are smaller, younger companies that could explode in value, but they could also crash. Much higher risk. So, the classic advice for anyone just starting out, stick with the large caps first. Get your feet wet there before you venture into riskier waters.
All right, enough theory. Let's get down to brass tacks. How does this actually work? What happens when you decide to buy your very first share? Let's walk through it step by step. So, the first thing you'll see is a choice between order types. A market order is like saying,
Just buy it for me now. I don't care about the exact price. It's fast, but you might pay more than you wanted. A limit order, on the other hand, is you saying, I'm only willing to buy this stock if the price is X or lower. You're in control, and for beginners, that control is everything. It's why we always recommend starting with limit orders.
And here's exactly how simple it is. Let's say you want to buy some HDFC Bank shares. You just open your broker's app, search for the stock, you choose limit order, and then you tell it two things. How many shares you want, say 10, and the maximum price you're willing to pay, like 1,495 rupees. You hit confirm, and that's it. Your order just sits there waiting. If and when the market price hits your price, boom, the trade happens. And the next day, those shares are sitting safely in your Demat account. See? Not so scary?
Okay, you have your map, you have your toolkit, you're almost ready to go. But just like any adventure, there are some rules of the road you need to know to stay safe. Let's cover those really quick. First things first, you should know that the Indian stock market isn't some lawless Wild West. Not at all. There's a powerful referee on the field called SEBI. Their entire job is to look out for investors like us, to stop scams, and to make sure everyone is playing by the same set of fair rules. That's a huge confidence booster.
So let's boil it all down into your beginner checklist, your starter pack, if you will. 1. Start on the NSE, because that's where the action is. 2. Begin with big, well-known large-cap stocks. 3. Find a broker whose app is easy to use. 4. Always, and I mean always, use limit orders to control your price. And 5. The most important rule of all. Remember, this is a marathon, not a sprint. This is about long-term growth, not getting rich overnight. And there you have it. That's the basic map. What might have seemed like a confusing maze before is hopefully starting to look more like a landscape of opportunity. You've got the lay of the land now, so the only real question left is, what's your first step going to be?